Hello everyone, it's David Blair, Crosshairs Trader. Let's talk today about the laws of right chart thinking. There are several of these laws, and then we apply these laws to our trading. And the reason we call it the laws of right chart thinking is we base our decisions about making a trade from a technical standpoint based on past patterns to the left-hand side of the current price. However, once we get into a trade, we must get into the mode of thinking to the right-hand side of the chart that has not developed yet. And these are the laws that help us develop the mindset for thinking to the right-hand side of the chart. And we're going to take a look at dozens of charts here in just a moment to help each of us understand exactly what it is that I'm talking about when it comes to right chart thinking. So first of all, the first law is the market will do what it wants, how it wants, when it wants, regardless of the grand designs, wishes, and technical and or fundamental mumbo jumbo of its many and varied participants. In other words, the market is master, so we must get over it. Outcomes. Number 2, outcomes of a predetermined edge are randomly distributed between wins and losses over a series of like trades. In other words, we cannot know what will succeed or fail until after the fact. Even if you trade the same setup over and over and over again, we never know which ones are going to work and which ones will not work. Which ones will make us money and which ones will not. It can be the exact same trade over and over again. No guarantee that they're all going to work, as we'll see in just a moment. Regardless of past knowledge, no one can accurately predict future prices with any degree of certainty. No one can tell the future. Doesn't matter if you've got a degree in finance or a CMT designation, it won't help. You're not going to be able to tell the future. Number 4, variables that incorporate uncertainty, which we find in the stock market, are unable to perfectly replicate the past. We may think that there's patterns that can repeat, but they'll never repeat exactly the same way. So number 5, patterns do repeat, but so do pattern failures, which are also patterns. And we can trade them too, actually. Therefore, we expect any and accept all of the following outcomes, as long as we believe in these laws, which I do not see how you can not believe them. But as long as we believe them, we must accept any of the following outcomes on any trade. They can be a go. The trade begins working immediately and doesn't look back. The trade can be a no. The trade fails immediately and does not recover. It can be a slow. It takes its own sweet time to work. It may even come back and test a loss line that's been established before it starts working. And then FOOYA. Number 4, the trade may break our loss line, then begin working after we have exited the trade for a loss. And the market says, fooled ya. So these are our laws, and these are what we can expect based on these laws. When we trade, we must think appropriately when it comes to the right-hand side of the chart. Let's take a look at some examples. All right, in thinking go slow, no, and FOOYA, and our understanding of the laws of right chart thinking, let's take a particular strategy. With Crosshairs Trading, it is our itch in the crosshair signal indicator. It has a lot to do with trends and breakouts. We have reversals. Think about this. The market does one of 3 things. It goes up, it goes down, and it goes sideways. We want to make money on the up and the down. We trade bullish positions and we trade bearish positions. Therefore, all you need is some kind of indication that a price may be heading higher for a sustained period of time or lower. And if your edge does not present itself, then you do nothing with it. So in this video, we're going to discuss specific signals in our proprietary workspace in the TradeStation platform, the one I use for determining my edge. and that's going to be an itch. In this video, the itch, which is a trend continuation or reversal indicator. All right, so thinking about go, slow, no, FOOYA. Let's look at Goldman Sachs to begin with. This is a go. There was a signal, did not break a loss line, and these horizontal lines can be loss lines. Did not break the loss line and immediately took off. Did not come back and test. Did not rest. BMY. Take a look at BMY. Same kind of signal. It actually came back, tested the loss line. It rested and then took off. How about GPOR? Take a look. Same kind of signal. Remember our laws. There's a random distribution of wins and losses. There's a random distribution of goes, slows, and nos. We never know how they're going to work out once we get in it. This one actually came back, GPOR, and tested the breakout. So it was a slow and then continued higher. How about CCI? Started off as a go, slowed down a little bit, and then continued to go. Same kind of signal. Slow. STX. STX was a FOOYA. Here was your signal. Broke the loss lines and then immediately recovered and continued higher. You're never going to know what's going to happen. How about UTX? UTX gave us a FOOYA, but then gave us a go. This is why it's important that we take every single one of our signals. Once we do our art of the chart, which I teach in Crosshairs trading, once we line up our steps to the trade, not only do we take the signal and look at the signal and make a decision about the signal, but we also look at other variables such as general market, support and resistance, weekly chart, because we look at both charts, and this is the daily. Once we make that determination, we get into the trade. Well, in this case, UTX had a nice trade here, but we couldn't see the right-hand side of the chart. It failed, got out of it. If you were to have gotten out of this trade at the breakout level, that was your loss line, came back, gave us another trade. You would have had to, based on our strategy, you would have needed to take this second trade, and see, you would have lost here, but look at what would have happened here. This is why it's important that we take all our trades that signal. EWW. Take a look. Works with ETFs too. Here's a couple of itches. Worked quickly, came back, continued to go. This one failed. Would have hit your loss line. This one slow to begin with and then took off. They're all different. Amgen. Look at Amgen. Broke out nicely here. Continued higher, loss line. That was a go right off the bat. Take a look at these on Celgene. Here was a FOOYA. Here was a go. Here was a slow, never did break your loss line, and then continued higher. So if you were following your loss line rules, you would have got out here with a loss. So what? Then you would have had to have taken the next one. More than made up that loss. Maybe got out for a profit. Watch this one take a month to finally work. So a slow. So we had a no, a go, and a slow. Same signals. Different results to the right-hand side. XRT. Go. Fooled you. That's just the way it is. Win. Go. Came back and tested. Slow. Go. SSO, another ETF. General market ETF. Go. Go. Came back. Fooled you if you were still in it, but another go. MSI. Take a look. Go. Slow. Slow. Go. Same signal. Different results. Triple M. No. Go. PLD. Go. Go. You could actually call this a slow. Go. Slow. Same result though. GME. Go. 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 COV. Go. 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 No. You never know when they're not going to work and when the next big one will come. You never know. Random distribution of wins and losses, and you can't tell the future. Go. CCE. PEP. PEP. Slow. Go, or slow, kind of along the, back and forth here. Slow. Go. AGN. Go. Slow. Slow. No. NOC. Go. Go. RAI. No. Fooled you, actually. But then you would have taken the second one, or you should have. RAI. More than made up for the other one. If you would have taken your losses, you should have. And NWSA. No. Fooled you. Slow. Held the breakout line, held the loss line that's in our proprietary workspace, and continued higher. These things can also work on the weekly chart. So let's take a look at the weekly charts. Let's stop where we left off, or start back where we left off. NWSA weekly chart. And in Crosshairs trading, we use a combination of the daily and weekly chart signals, and I've made videos for that very idea. NWSA, slow, even a no, and then look at the next one. DCH is our signal on the weekly chart. That was a go. Took off. You never know on the weekly charts what's going to happen either. KMB, slow. Go. CCI, go. Slow. No. Big go. XRT. Slow. Go. No. Go. Walmart. No. Go. Triple Qs. Go. Slow. And then took off. Again, same signals. You just never know what the result's going to be. You can trade head and shoulders. You can trade engulfing candles. You can trade Fibonacci. Trade the same things over and over and over again. Some of them are going to work. Some of them aren't. We cannot predict which ones will and which ones won't. DCH on Raw, slow. And then just a go. Just took off. CL. Fooled ya. Slow. Slow. Go. C. No. Go. Amgen. Go. Slow. Go. Slow. Even a rejection if you took this loss line. No. And now a go. MDY. No. Go. Go. ORLY right now. These are some right now. Slow, FOOYA, go. Go. Let's take a look at some others that are firing right now as of today, this week. CBS, go. NSC, several no's here, go. AXL, taking off, go. Google, a no here, or even a slow, go. And NQ, let's look at the futures. Here was a slow, here was a go, a slow, and now a go again. So our understanding is, with the laws of right chart thinking, basically what we're saying is we must trade our edge each and every time and accept what's going to happen on the right hand side of the chart, whatever it may be. It could be a profit, it could be a profit taken away because it gets rejected, could be a no, could be a slow. May take time for that trade to work. Bottom line is we never know which ones are going to be the big winners. Therefore, we must take each signal based on the signal and our intuition and our other principles that we look at as far as bigger charts, support resistance, general market conditions. All of these things must be taken into consideration with our signal, and even applying all of these possibilities, there is no guarantee that the trade will be a go. There's no guarantee it will be a slow. There's no guarantee it will be a no. And it could be even a FOOYA. Whatever the case, we are prepared because we fully expect it to be one of those, and we fully accept whatever they may be. If you got any questions or are interested in Crosshairs Trading University, please contact me, David at thecrosshairstrader.com, or visit my website, www.thecrosshairstrader.com. Thank you very much.